Okay. It says we're live.
Okay.
Okay. So we're good. We're live on YouTube. Hopefully, Joe, if you can. Oh, he's in the middle of a major snowstorm. We supposedly got snow here yesterday, but I was gone. I took off. I'm going somewhere where we don't have a lot of snow for a couple days, and
Yeah.
came back and it did look like we got some snow too. But I mean, we get
Wow.
snow all the time, so we're just used to it. But um,
Yeah, it was raining over here.
yeah,
Raining all week.
lots of
Yeah.
precipitation everywhere. So on the good side of social media, he says, Josh, can you see us and hear us on YouTube? I just want to make sure that we're good to go. 4 inches in 2 hours. Yeah, that sounds about
Wow.
how it is here too. Yeah. Well, not. I mean, I've seen it way more than that here, but
Wow.
we're used to that here. Okay, so 7 o'clock, everybody. For those of you that don't know me, I'm Mo. We're on TikTok and YouTube. And this is Tanya. She is a CPA, and we're going to be talking about gig work and trying to do our taxes with 1099s, not having a typical W 2 job, or maybe you have a W 2 job and have some gig work on the side and just not sure how to do your taxes with that side hustle job that you have. So, Joey said we're good on YouTube too. So thanks, Joe. Yeah. So, Tanya, you we'll get a little bit of your background, even though most of us know, but for those of us that haven't met you yet.
Yes, I am CPA licensed 2005, so it's been 20 years. And I started, obviously, as everybody, like afraid of my taxes. I would just hand my paperwork to my parents. They would take them to their tax people, and I'd get an envelope back with a copy and a refund, which I didn't even know how that worked. I was like, oh, weird. Federal seems to be like a higher refund, and state is like a lower refund, whatever.
Right.
But I just had one W-2, so easy. But I didn't know. I was so afraid, and then I learned how to do it by working at an accounting firm, and it like opened my eyes. I was like, oh wow, like my brain, it worked for me. My brain clicked,
Right.
and I understood it. And ever since then, I just started to help out my friends and family on the side. Like, let me help. And I started to like add a lot of people. I started to charge. I grew it into a tax business, 250 clients. Then I got burnt out and overwhelmed because I didn't know how to set boundaries. And then I got rid of all those clients. And now I'm just doing consulting and education and helping people understand their taxes and get clear and feel. There's so many people that feel like the IRS is going to come after me and I'm going to go to jail or I'm doing something wrong.
Right.
And I've seen it so much. I've been in it so much that I want to like try to take the fear away, and it doesn't have to be that scary. And
Right.
And, yeah.
Right. I think it's really cool how you've kind of evolved, where you started out like the rest of us, scared, and then just kind of got to know a little bit, and then exploded and got all this experience.
Yes.
And realized, like all of us, set some boundaries.
Yeah.
and but then realize that you really do have a passion for it, but you want to help people. You just want to do it in a way where you don't burn yourself out all the time.
Yeah, definitely. Something more sustainable. And I've seen the journey too, where I was just an employee and then I did my little side hustle, and then that side hustle turned into my main hustle. And so I've seen it where I was in a W-2, and then I was a W-2 and 1099, and then I was just pure 1099 contractor. Yep. And then once you go over a certain amount or just try to save taxes, then you become an S corp, and then that's the next level, becoming an S corp. And it's really easy when you're just one owner, one person. Right. It gets a little more complicated when you have other owners, and there's different rules when you have different owners. But that's kind of the journey. to being self-employed. So I've seen the whole self-employed picture. And of course, doing my own taxes, I want to write off as much as possible and legally possible and make sure I'm paying the least amount of taxes as possible.
Exactly.
Because it just sucks. It sucks to pay taxes. It sucks.
It really does. And especially for those of us that are full-time 1099 workers. I remember the first year, I set aside money every week, and I was really good at doing that because I was scared. And I obviously didn't set aside enough to pay the person to do my taxes and to pay my taxes.
Yeah.
So I think she did it wrong, but we won't go there.
Yeah.
And but like you, I want to pay the least amount, but I also want to be prepared too.
So I wanted
just let everybody know right now. At the top of my page, I do have a free guide on savings accounts, high yield savings accounts, and I think we all need to start right now and get that savings account where you're putting some money in every week and saving for that, because
you get
to that time in April.
I used to do my
taxes right away. Because, I would,
oh yeah.
Especially when I had young kids.
Yeah.
But now it's like I don't know how much I owe. But anyway.
And I can when you're W-2, they take the money out, so you don't feel the effect.
Yes.
So when you're self-employed, it's like, even though you might be paying less taxes overall compared to like the income you're making when you're a W-2, it still kind of sucks to just like send them a check. Like it just feels different.
It does.
Because you don't, like when you're working, they just take it out, even though, you see your pay stub and you're like, where'd all my money go?
And right now they don't have a system for 1099 people to be like, every time, I don't know, money comes in through Stripe or something, it automatically goes to the IRS, but there's nothing, it's up to us to send in what we should be sending in.
So Josh is saying that there is some feedback.
Oh, okay.
On
YouTube.
Yeah. Does it seem like it's me or Tanya? Josh. I'm just gonna let me see. I can turn my audio. Let's see. Is that better?
I'll turn my phone audio down too.
Okay, yeah, I can do that too.
Just so it doesn't pick up on my microphone.
Right. You hear my voice twice. Is it better now, Josh? We'll see. We'll see what happens.
Yeah.
I made an adjustment on my. Oh, he said good now. Okay. Awesome. Thank you. Thank you very much. Because the last one, it was kind of like that too. And it was like just painful to listen to.
Yeah.
Good information, but you had that, where you hear it twice. But.
Yeah.
So some of the questions that we went over last time, but I think we could go over it again. We might as well just right away start off with this no tax on tips. So how does the new no tax on tips rule apply to gig workers?
For independent contractors, you have, for this year, 2025, you'll probably have to gather your tip amount on your own, or the company, like DoorDash, will send you your tip amount because it won't be reported on any 1099. Right. So that's the first step, is figuring out, okay, the 1099 will have everything included. It will include my tip money. So what's the amount that's in there, that's in the 1099, and get that number, because that number is going to get reported on a different section of the tax return. There's like a separate little input, and you'll get a deduction against your overall income. And I was trying to find an analogy, like a food analogy, to like make it make sense, because there's like two types of taxes for self-employed people. There's the self-employed taxes and there's ordinary income taxes. And the no tax on tips, you get to reduce your ordinary income taxes, but not your self-employment taxes.
Right.
So you're still going to be taxed on it based on your business profit. And so I don't know, that's not a good analogy, but I was like, okay, if you're going out to dinner and you get your dinner and it's like a ribeye, mashed potatoes, and broccoli, and you are going to share that with a friend. Well, you normally would share the all of it, the ribeye, the mashed potatoes, and broccoli. Well, now you don't have to share the mashed potatoes and broccoli. Now you're just going to share the ribeye.
Right.
So you're still going to pay some taxes. It's just not going to be all of them.
Right. No, that's that. I think that's a good analogy.
Yeah.
So do we pay we're going to pay the self-employment tax first.
Yes.
And then
yes, you're gonna do like your business taxes how you always did them. Do get your 1099, write off all your business expenses. Don't worry about the tips yet. So report everything on the 1099. Do all your write-offs, and all that gets reported on a Schedule C. So your Schedule C will look exactly the same. Nothing's going to change there. Mm-hmm. Then you'll get your tip amount, and then depending on what software you're using for taxes, I'm sure they're going to ask you, was there any tips included in any of your income? And then that's where you're going to put your tip amount. And then that will get reduced. That'll reduce your adjusted gross income on page 1 of your tax return. So it'll reduce it on the form 1040, page 1, but it won't do anything to your Schedule C.
Okay. So Mulberry Creek, I'm sorry to cut you off, Tanya, but Mulberry Creek says, where do we get the tip amount? So if you're talking about DoorDash, DoorDash did send us an email with the tips separated from our base pay. Hi, Katie. But the other ones, you're going to have to go in and figure it out yourself or estimate. Because like Tanya said, Katie, thanks for the roses. But Tanya said that the IRS is giving some leeway this year because it's not included in the 1099. Now, I do a lot of Uber Eats, and they separate it out right away. So they send you a thing right away before they even send your 1099, or maybe it's with the 1099, but they even separate things that you can write off as business expenses. So like if you do an instant cash out, it charges you like $1.25. It puts that in that little expenses.
Wow.
That you can use as a write-off, which that's the most organized platform that I know as far as with reporting for taxes or whatever. IRS will accept my account of tips amount.
They will, especially if it's not included in the W-2. If it's not reported on any of the tax forms, they're going to accept whatever you give them. And some W-2s will have it, and some W-2s will also have the overtime pay, but if for 2025, they won't, a lot of them. And so they're going to allow you to estimate or do your best at gathering that and reporting it yourself.
Right. Katie says, I cash out every Sunday on Instacart. How does that work? If you get charged an amount for cashing out, Katie, that cash out amount, like if it's $1.25 to send it to your bank account instantly, that can be written off.
Yeah, it's like a merchant fee, like a processing fee.
Right.
Yeah.
And on DoorDash, when I did DoorDash back in 2025, yeah. So any of those fees you add up and you can put those into your business expenses. Mm-hmm. Mm-hmm.
Yeah.
So let's see. So that's does anybody else have questions on no tax on tips? If you do, you can go ahead and put it in the comments, but we can, let's see. Okay, so let's do the standard mileage deduction versus actual expenses. What's the difference and how do we know which one to choose?
Yeah. So with the auto, you get to write off your miles, and the IRS gives a mileage rate. And for 2025, it's 70 cents. So depending on how many miles you drove for your business, you multiply those miles by the 70 cents, and then that's your deduction.
Mhm.
And it's more streamlined. It's easier. That 70 cents, it includes all your repairs and gas and insurance. So you don't have to worry about gathering all the actual expenses because the 70 cents like kind of gives you it there.
Right.
And so that's the mileage deduction. The mileage deduction, all you have to worry about is gathering your miles, DMV fees, and interest on your loan, on your car loan, if you had a car loan.
Right.
And that's it. But if you want to see, okay, but what about my actual expenses? Your actual expenses would be gathering up all your actual expenses, like your gas and your insurance and your repairs, and adding those all up and timesing that by the percentage that you used your car, the business use percentage. So if you used it 50% for business, then you would take 50% of all your actual expenses.
Right.
And then you can take that as the deduction. And if you want, for the first year, if this is your first year taking your car as a deduction, you can do both methods and see which one's the bigger method. And usually I find that the mileage method is always the bigger method.
Yeah.
And then once you decide on what method you're going to go with, you have to stick with it until you change cars. So as long as you have this car and you're using this car for business, that's the method you'll always do every year.
So I have my car. I've had my car for a couple of years. Since I just used the mileage, I can't change until I get a different car.
No.
That's something, I know you've told me this, but it's sticking in my head now. I get it now. Until I get a different car, I have to stay with the mileage. Even though I don't think that I would do the itemized. It just, for me, it seems too hard. And I would lose my receipts. And I mean, unless I had like one card that I did, all my oil changes and car washes and gas, and there's so much when you drive all day every day. Mm-hmm. There's so much. I mean, you almost have to have a dedicated account with a debit card or a dedicated credit card that you use strictly for that.
Yeah.
Now, here's a question. So if you use a credit card, whether it's personal or business, if you use a credit card to pay for all of those things, are you able to write off the interest at all or no?
Even though you might be taking the mileage deduction?
No, if you're just doing or if you're doing the itemized.
Mm-hmm. The interest on the credit card or the interest on the car loan?
Credit card.
I would say if you've got that credit card, and that's a good question because
I'm not sure. I don't know why that just popped into my head. And if you don't know, that's fine. You can let me know later. But
I want to say yes because your car, you're using some of the car for business.
Mm-hmm.
So let's say this credit card is pure auto expenses. I would say yes, because even though you might not be taking the actual expenses, the mileage method, that's 70 cents per mile, I'm trying to argue for yes, because
right?
whatever, like let's say you do get audited and the IRS, you're sitting in front of an IRS agent, you know?
Right.
How would you explain it? Like, well, it was necessary and ordinary for me to take the interest expense on this credit card.
Right.
Because I do charge auto expenses and I use my car for business. Right. And even though I might not be taking the actual method, I'm taking a method for my car for a deduction. I think it would be a better argument if you did use the card for like charge it for like another thing for business, like maybe aside from the miles, another thing you can deduct for your car is, let's say you get like mats for your like foot mats, or you get like fabric to cover your seats, or you get water bottles or snacks for your people. That all is 100% write-off. So let's say you use that card to buy like kind of accessories for your car, then that's a better argument to be like, well, I can deduct the interest expense on that car or on that card. Yeah.
Right. Yeah.
It's all about like building up the argument for why you should be deducting the interest expense.
If you're confident about the argument, then
yeah.
Okay, so I
like
personally, with the mileage, I personally do the mileage. I think if someone were to ask me, and I only do my own taxes, but if someone were to ask me what I thought, I would say just go the easy route, do the mileage. Everyone that I've talked to that has tried to do it the other way has found that they don't have to pay as much in if they do the mileage. They get more of a deduction by doing the mileage than by saving all your expenses and receipts and
and you have to do the miles anyways. Like you have to gather your miles anyways.
You do.
Even if you were doing the actual expenses method, you still have to figure out the miles, because that's how you figure out the percentage.
Right.
Business use percentage.
So as far as mileage goes, then you take your mileage, your total mileage for the car that you drove total, and then I use Stride. If anyone needs to find where Stride is, go to the top of my page to my Stan Store. You can download Stride for free. I turn it on every time I leave the house when I go to work. And then I turn it off when I get home. A lot of times it'll pop up and say, "Are you still driving?" And I'm like, I'm just sitting here waiting for an order. Yes, do not end my trip. But I turn it on every time. It works really well. And then I take that amount. Do not take the DoorDash amount that they send you unless you only do DoorDash. And if you see the DoorDash email, they have active time and total time. Take the total mileage, not the active mileage. But definitely download something. There's Everlance, there's Stride, there's a bunch of different ones that you just have to get in the habit of turning it on. Sometimes I forget, but most of the time I don't. I turn it on before I turn my platform on, so that before I start working, I'm already tracking my mileage. So you take that total mileage from your car for the year, and then you subtract the mileage that you used for working, and then you figure out the percentage of what you used for working versus what you used for personal.
Yeah, and an easy way to do figure out that your total miles is at the beginning of the year, like jot down your odometer. At the end of the year, jot down your odometer. If you forgot, you could look at your like oil change receipts or something, and
that's what I had this year. I forgot
your mileage and estimate. Yeah. And with the mileage, what I was going to say about that is with deductions, to proving your deductions, one of the things the IRS looks at too is that you're documenting in real time, like during the year. For example, like if you didn't have an app and you got audited and you didn't keep any record of your miles and just kind of like
gave a lump. Yeah.
Figured it out right then and there during the audit, they kind of like take that as like a bad, like a red flag that these might not be accurate hours.
Right.
They want you to do it like contemporaneously throughout the year. And so
Right.
with apps, it's so perfect because it documents that you're doing it
Right.
during the year and at that time.
Right. And actually, some of these apps too, I don't use it because I'm not that organized, but you can put in your expenses and your income and all of that for the day. I wish I was that organized. I'm not.
Yeah.
But you can do that. Everlance has a really, really good where it figures everything out for you. So you kind of know like almost what you're going to owe or.
Yeah, because if you,
like
if
I said,
you know
you have
your
to gonna have to
profit
be
is-
really organized for that because
yeah.
Mhm.
Yeah, because if you know what your profit is, that's how you know, like, okay, even though with that, you still have, you might have other deductions that you can write off, like your health insurance premiums, if you contribute to a traditional IRA, that can be a deduction.
How much can you deduct with the IRA?
For 2025, it was 7,000.
Okay.
And it's the same
total amount that you put in, you can write off the total amount up to 7.
And it's the same rule as the tips. So it doesn't reduce your Schedule C business profit, your self-employment taxes. It'll help reduce your ordinary total income.
Okay.
Yeah.
So it's after you do the first part.
Yeah.
Okay. Yeah, because this year I finally opened one up and I didn't put that much in, but I mean, it was a few $100s. So, I mean, it's something to take off. So plus I have that, for myself. So
yeah. To at least lower your taxable income. I did a little TikTok, like explaining the tax brackets and how they work.
Oh,
and
cool.
The tax brackets, there's the single tax brackets, a married, filing, joint, and a household. Well, those tax brackets they get applied to your taxable income. So there's all these like different buckets of income. I'll have to figure out like a food analogy for all the buckets of income.
Yes.
But there's your self-employed business profit. Then there's your adjusted gross income. And then there's your taxable income. Because your adjusted gross income, then you deduct either your standard deduction or your itemized deductions. And then you get to deduct any credits, child tax credits, earned income credits, all the credits. And then you get your tax. But so your taxable income is the income that gets taxed by the tax brackets. And I did it, and somebody pointed out that like, well, what about your standard deduction? And for a single person, it's $15,750, and the amount was $79,000 of income. And I was like, you're right. That $79,000 doesn't include the $15,000 that was their standard deduction. So your total income is $95,000.
Oh.
$95,000 minus your standard deduction gives you $79,000, and that's what's taxed. So basically, everyone gets like tax-free $15,000 of tax-free income. So if you've made more than $15,000, then these other deductions, your tips and your traditional IRA contributions or your health insurance premiums can help lower it to make it below $15,000. And then you have zero taxable income. And then the tax brackets, you won't be taxed by any ordinary income taxes. It'll just be your self-employment taxes.
Right.
Yeah. So many different
yeah, It's hard to envision it too if you don't have something in front of you.
I know.
Where you have, but I have learned so much from you.
Yay.
That I feel like a lot more comfortable even just talking about, like, I understand, the progression of it, even though I really need to, I've started getting things together and I am working on all of my papers and all my stuff, but I need to get somebody to help me and to actually do them for me. So, I'm not doing them myself this year. I'm going to pay somebody to do it.
Yeah. And it's funny how like the more you do learn about it or talk about like different things will unlock, it's like, oh, now I get it. I've been explaining it like you've been explaining it, and it's like, oh, now that I am re-explaining it, like I get it now.
Right. And it's nice for me because people ask me all the time, and I don't know if you noticed, but I'm like, just ask.
Oh yes, yeah.
Just ask Tanya. Just ask Tanya, because
and I try to respond in the comments. Yeah. Like, hey, let me try to help.
Right. So, have you done a lot of TikTok videos that thank you, Sal? You guys haven't done the school thing with Tanya. Oh, Katie. Oh, I'm so glad that you signed up with her in the school thing. So yeah, school is SKOOL. And Tanya, what's your is it your name or what is your
It's a weird link. It's like it's not like a custom. I don't have a custom URL for it.
Can they find it if they go to the top of your TikTok
yeah.
page?
If they go to my profile and my link in bio, it'll be there.
Katie, she's so awesome. That's why Katie's my moderator, because she just Thank you, Katie. So, and thank you, Adrian and Katie, for the likes. I don't see any other questions. So let's see. We talked about no tax on tips. We talked about our mileage deductions. What documents should drivers be collecting throughout the year? Okay, so I guess we could go over what we can write off as far as like phone bill and car insurance and car payment interest. I know we can't do insurance, but if anybody is in the live and has questions on what we can write off, go ahead and put them in the comments so that we can let you know if there's something that you can write off or not. But what would you say, Tanya, are the so we have mileage, but what are the other things that we can write off?
Yeah, and Katie did have this question about, because in the classroom in my school community, I have my list of like over 100 write-offs, and I have been asked to be like, oh, can you have this be specific to my business? Because I have a specific business. What can I write off for my specific business? So with this list, it's like generic. So everybody who's got a little side hustle can write off all of these write-offs because they all apply. Now, it might be specific to little industries where, okay, for the drivers, of course, if you buy accessories for your car, then those are a write-off because you're transporting customers, and that's specific. So for me, if I had, like when I had my tax business, if I bought, cushions, cushions, I wouldn't be able to write that off,
Right.
So little things do have specifics, but the list that I have, it's just all generic stuff. Let's see here. I'm looking at my list right now. There's different buckets, and maybe a lot of these buckets won't apply. But like advertising, and if you want me to talk about just the DoorDashers and the Instacarts and that type of business, let's see, from my list. So like we talked about, if you have a credit card, then the interest expense on that credit card, you don't have to do any general, you're not you do have to get like specific car insurance, but if you're doing the mileage method, then it's included in the mileage rate.
Right.
Your home office is the other big one, because even though, you're out and about, you do need a specific place to like do your paperwork and do all of that. And so you can do your home office. And with the home office, you calculate your little square footage of your little office space, and that gives you a percentage. Let's say it's like 15%. Well, then depending on if you own the home or you rent, if you rent, it's your rent expense, it's your renter's insurance. It's let's say insurance. Yeah, renter's insurance. I mean, it's part of your house expenses. Right. If you have like a home security system like Ring, And I know with Ring, you have to pay like an annual subscription. So that can be part of it because your home is part of it. And all those would be multiplied by your little percentage of your home office. But let's say you buy furniture for your office. Let's say you buy a desk or a chair, then that would be 100% write-off. That would be like kind of more equipment for your business. So you can write off those kinds of things. And that would be, if it's large purchases, you can do like the bonus depreciation thing that's like so popular.
Right.
Because there's like a rule, it's not like an IRS rule. It's more like your own personal rule of like, what are you going to capitalize and depreciate? And all that means is, before the bonus depreciation, like you bought a computer, it's let's say $2,000, then you have to write it off over 3 years.
Okay.
And you divide it by 3, and then you just take that expense over 3 years. But now with the bonus depreciation, you can write it off all in the same year, and it's a $2,000 write-off, 100% in the first year. You don't have to spread it out. Yeah.
Okay, so that's something new. So if because I was actually just thinking about getting a new computer. So if I needed to get a new computer, then I could take what I spent and deduct it in that first year.
In that first year, yeah.
Okay.
And it's cool because the bonus depreciation, it was like going away slowly. And it was like going down to 40%. And now it's going to be 100% for a whole year. Or sorry, for the whole 4 years or whatever Trump is in office. Until they change the one big beautiful bill.
Right.
So large purchases that are over $1,000, you can write off all at once. So yeah, if you buy a piece of furniture for your office, that's 100% write-off.
But if it's under $1,000, then is that different? Then?
Well, if it's over 1,000, then you list it kind of like as a depreciable asset, and so it kind of goes on a different form, and it's kind of like treated as a depreciable asset, and then you take the bonus depreciation on it. If it's less than 1,000, then you don't have to deal with that. You don't have to
it just
list
goes
it as a separate piece of equipment. It's just like a regular normal write-off. Yeah.
Okay. Now, Adrienne, she had a question. Does that mean I would use the Schedule C for all those write-offs? Yes.
Yeah. Yeah. The Schedule C would be is where you would report all the write-offs.
Right. So we're talking mileage, phone bill,
internet.
Josh says, I hate the big, beautiful bill. Interest on your car payment. Like you said, anything. And I always bring this up, but like I bought a rug cleaner. And I use that on the inside of my car. So I use it, but you can't write off if you have like a subscription to a car wash place. That goes into the mileage. The car wash, the oil change, all of those things. It's really difficult. I remember when I went to H&R Block the first year, and she's like, "Oh, if you bought a vacuum and you use it to clean your car, then that's." But it's like, well, why can't I write that off? But I can't write off a car wash.
Yeah.
I mean, I have it in my head that that's how it is. So I'm assuming that it's things that you use to.
I haven't been through an IRS audit where they specifically excluded the car washes, and I haven't seen any rule that says car washes. I know for sure it's the upkeep of your car. I know for sure it's the repairs and maintenance, and like to like run your car, like your gas,
like tires and
the insurance. I know for sure that's under actual expenses. So I just lumped the car washes in with all that,
Right.
Because it's
that's what I was thinking too. But then when I thought, well, if I'm cleaning the inside of my car with a vacuum and I can write that off, then why wouldn't I? Because I use the vacuum at the car wash place.
Yeah.
So, I don't know.
It's interesting. I haven't heard any stories of like, okay, they allowed the vacuum, but then they didn't allow the car washes, or they allowed.
Right.
Yeah. I don't know. Maybe it's so small that it just hasn't been on the radar of the IRS agents. Because what if you did put? But see, because it's supplies. Like supplies is another line item on the Schedule C, and you could lump all that into supplies. The vacuum,
right?
Cleaning supplies for your car,
right?
But could you lump in a car wash under supplies? You know.
Maybe I will.
Yeah, it's so small that like.
Yeah. Adrian says my state has personal property tax. What about that on my car?
Yeah, and that's the part that you can still write off when you're doing the mileage method. It's that personal property tax for your car.
So that goes in with the mileage?
Yeah.
Okay.
You can write it off on top of the miles. On top of the mileage. Yeah.
Okay. So Adrian, I hope that answered your question. Mama Tay says you can only claim interest on car payment if purchased in 2025, but that's not true. Is that correct?
That is true for the new rule. For everybody, even employees, like W-2 people, all people, if they buy a new car, now they can write off the interest. But for the 1099ers, the self-employed, the gig workers, we've always been able to write off the interest portion.
Oh, okay.
For business. Yeah.
Okay.
Yeah.
So
it doesn't have to be a new car for you, for us.
Okay. For us, it does not.
Yeah.
But for everyone else, like W-2, this is a new thing for people who just have W-2. Okay. So
for people who don't have little businesses or side hustles, now they can unlock it when they never used to be able to.
Katie says my tax preparer who I had before claimed my car washes on my taxes. So I think I'm going to do that.
Yeah.
Because I did getting a car wash where I live. I live in a not very small town, but a much smaller town. And it's very expensive to get a car wash here. So when I always travel to where my boyfriend has been working, and I have a membership, and it's $20 a month, and I just go and get my car washed like a whole bunch of times while I'm down there. And I don't even think you can get one car wash for $20 here. So it's So it would be nice to be able to write that off. Would be nice.
So Mama Tay, she's saying, she's doing her taxes, and mine didn't qualify. You might be putting the interest expense in a different spot, because the interest expense for your gig work will go on the Schedule C. So wherever you're inputting all your write-offs and your car expenses, that's where you would put your interest expense on your car loan.
Okay.
And it'll add it to your auto deduction on the Schedule C. For the new rule, that's going to be a new schedule, Schedule 1-A. So if you try to put your interest expense on that, and it's not a new car, and because you have to put your VIN, vehicle identification number.
Oh, okay.
On that other schedule. And then they'll know it's not a new car. It doesn't qualify for that other deduction on Schedule 1A, but for your Schedule C, it will.
Okay. How do you fill out TurboTax this year? Because I know last year they had problems. Do you know what problems? I mean, did they have problems with?
I don't. I don't use TurboTax, and I kind of want to just create an account just to play around with it.
How do you feel about? I know. Mike does the same thing. I used TurboTax last year, and I paid for them to go through it and make sure that I did it right, because I was scared that I wasn't going to do it right. And honestly, the amount I paid to do it myself and have somebody look at it through TurboTax, I could have taken that money and gone to a small CPA here and paid her that amount and had her do it and have somebody actually talk to me. So that's how I feel. I don't know about you, Tanya. What do you think?
I know the fees just started to get more and more. But
I mean, it's nice because there's a human that you can talk to now.
Yeah.
But at the same time, you have to pay those higher amounts.
Yeah. I use Intuit. I use ProConnect Tax. It's like a more professional type of little tax software, but still Intuit owns both of the softwares. Right. But it's so different because I know TurboTax. It just takes a long time because you have to answer all the questions, and they just want to make sure that they're capturing everything and you've thought about everything. Yep. So it just takes it takes time to answer all those questions. And I wish there was like an easy way to just and go to where you want to enter and just enter it and not have to go through all the questions.
Well, for me, it's nice because I've used TurboTax a few different times. And so it inputs a lot of my information already in there.
Yeah.
And that was easy for me. But Mama Tay says everyone recommends Free Tax USA. So that's, I guess TurboTax is just like the name that you hear more.
Yeah.
I've heard of Free Tax USA, but you don't hear that name quite as often. So that's why people don't.
That's true. There's so many. And now the IRS website itself has a free file system, direct file. You have to be making under a certain amount. But and it's only available on with some states. I haven't gone through it, but I'd be curious to see how easy it is to use too. But they came out with their own
that's interesting.
Filing. Yeah.
Yeah. I mean, I guess I would trust that. I don't know. I'd be like, I don't know, are you gonna audit me?
I know.
Already.
So it's saying for $89,000 or less.
89.
Choose an IRS free file. Explore free guided tax software. I think just TurboTax is the popular one, but I'm sure there's probably better ones. Right. And I might go in there and I might just spend a day what does free tax look like? What is there's another one, Tax Act.
Tax Act, yep.
What does the IRS one look like, and see which one kind of works. They got in trouble with TurboTax because they were claiming file it for free, and then they hide all these fees, and then it's really not for free.
Right, and now I see they have commercials on now, and it's they have all these disclaimers down at the bottom there. Yeah, Mama Tay, I went to H&R Block the first year that I was doing gig work, and I guess it depends on your office. I used to work. My boyfriend always makes fun of me because I always say I used to work there, and he's like, "How many jobs did you have?"
Oh my God.
Yeah, but I did work at H&R Block as a receptionist, and they don't have. I mean, they do have people who are licensed. I think they might all be licensed, but they don't go through that. They don't go through a long schooling or anything. They just. Yeah. They have someone who helps you prepare. They prepare it, and then they give it to the person who's licensed and make sure that everything's okay. But I don't know. I don't know.
And do you like to go? I guess if you're going to find somebody, are you going to go in person to their office? Yeah.
Yeah. I know my boyfriend uses someone that lives here, so I probably will go to her. Or there's one other one that I was looking at that. I'm going to have to probably, what is it, Thursday? I'll probably give them a call tomorrow just to say, hey, I'm going to be doing this. Probably not soon, but, within the next month or so. So,
yeah.
Mm-hmm. Let's see. What else we got? Mileage. I just want to go over real quick. We have about 10 minutes. The DoorDash 1099 and the DoorDash tip email. So for those of you who haven't found your 1099, you go into DoorDash, you go to earnings, and I think it's earnings statements or tax statements it is, and you'll find your 1099 there in the actual app, which I don't like that. They used to use Stripe, and it would send it to you through Stripe, but now it's in the app. So the people who are still active in the app can access their 1099, but unless you went in and requested them to mail your 1099, if they deactivated you, you have no way to get into that app. You have no way to get your 1099. I don't like that at all. They also have their it's called Crimson Card. They used to have Dasher Direct, which had its own app, its own customer service. Now they have Crimson Card, which is right in the DoorDash app. And if you are deactivated or the app is down, you don't have access to your banking, your 1099, any of that stuff. I don't like that at all. Yeah. So anyway, that's how you find your 1099. That is different than the DoorDash tip email. So they sent 2 emails. So they sent one, and then they sent another one with the correct amount. So for the people that used that first email and then did their taxes, then they got a second email saying, oh, this is the corrected amount. Yeah. But anyway, used the total mileage, and then your tips are separated out in that email as well. Josh said, Tanya's doing my taxes this year. And Katie says, if my tips totaled $25,200, do I get the full $25,000?
If your adjusted gross income ends up still being $25,000, then yes, you will get the $25,000. Yeah. If after all your expenses and deductions and mileage deduction and home office deduction, if you're still left over with $25,000 of income, then yes, you will get the $25,000.
Right.
Deduction.
I'm gonna have to run through my numbers. Do you want to do another live before?
Oh yeah. I mean, We've got March. I think March is kind of like, and beginning of April. March is the big month because it's like April's coming around the corner, and so
right.
people
right.
And
so,
still people are still barely getting their documents now, and it's middle of February. So
right. Katie says, please another live. Okay.
Yeah.
Let me look at my calendar here. We're on the 19th right now, and I know there's a couple other gig workers that do Wednesdays. So I would say Mondays, Tuesdays, or Thursdays probably are the best for me.
Okay.
So do you want to do maybe in another 2 weeks?
Yeah.
Okay. Does that sound good to everybody? Let me just look at, I don't want to close you out on my phone. Let's see, we got Thursday the 5th. Would that work for you?
That would work.
Okay. I'm thinking that I don't have access to my calendar right now.
Okay.
But we'll say the 5th at 7 again.
Mm-hmm.
Does that work for you guys? 7 o'clock? Yeah, we can do that again. And then, yeah, I mean, okay.
That's when I'm doing office hours that day too at 2 p.m. Pacific time.
Okay.
And so that'll be a fun day of Q&A stuff.
Yeah. So 2 o'clock your time is what, 5 o'clock our time?
Mm-hmm.
Okay. What time is it there?
We would totally work. 4 p.m. my time would work. 7 p.m. your time.
7?
Yeah.
Okay. Yeah, that's perfect. What about the tips? Are they taxable? No. Well,
yes, they are taxable for self-employment taxes.
Right. For self-employment taxes.
Yeah.
But then after that, then we get to deduct those. Yeah. From our adjusted gross income.
Yes. Well, yeah. From to calculate your self-employment taxes, Social Security and Medicare, on your business profit after your 1099 income minus all your expenses. You got to pay the self-employment taxes if you've got anything left over. So that tip money that's included in your 1099, you'll pay those taxes.
Right.
But then you can deduct the tips so that it'll reduce your ordinary income taxes
Right.
based on your taxable income after that, where they calculate other taxes on top of your self-employment taxes, and those other taxes you won't pay. The tips aren't taxable.
So is it possible to get money back then if we have more tips than what that amount is? Or I don't.
It's possible if you paid quarterly estimated tax payments,
Okay.
and you paid some money in,
Right.
and you overpaid, then it's possible. It's also possible to reduce your income, and then you qualify for some sort of credits, education credits, or child or earned income credits.
Right.
It could be possible. Yeah.
Okay. Josh says, can my gambling winnings be claimed as investments since the big, beautiful screw job screws us? I don't know.
Well, in gambling winnings, you can deduct all your gambling losses. So if you did gamble and you lost that money, you can deduct your new winnings by all the money that you lost in the year.
Oh, wow.
To break it into to break even. So if you won $1,000, but you lost $1,000 before, then you break even and it's zero.
Wow.
Yeah.
Well, that's So you have to add everything from all 1099s and do all the deductions, and that will be your adjusted gross income.
Yeah, you add everything for all your 1099s, you do all your deductions, you do all your business expense Schedule C deductions.
Mm-hmm.
And then that will be your income. And then you deduct your tips, and then that will be your adjusted gross income.
So after we do all of that, and then we take the tips off, then, Katie's got it. Katie's got it. I keep thinking I got it, and then I'm like, wait, maybe I don't. I just need to look at it. I don't know. So, but we are coming up on 8:00, and I just want to thank you so much to you guys on YouTube as well, and on TikTok. Thank you, Tanya, very much for being here for us. And if you guys don't follow her, make sure you go and follow her here and also on TikTok. And you're welcome, Katie. And I will. Last time I don't think I posted I've been sick and busy and out of town. And so I will post the replay on TikTok and on YouTube. And also make sure you follow Tanya on School. If you can go to the top of her page here on TikTok and make sure you follow her there.
Yay.
Yeah. And thank you, Linda, for following us. I guess we're good, but thank you, Tanya.
You're welcome.
And you guys, we're going to do, unless something big happens and changes and there's something on my calendar that I don't know about, we will be doing it again on Thursday, March 5th, I believe, at 7:00.
Yes.
Okay.
Okay.
All right. Thanks, Tanya. Have a good
Welcome.
night. Thank you, guys.
Bye.
Bye.
Let me turn this up.
Bye, YouTubes.